Rajesh Bhatia, CIO of ITA Asset Management Company, because he thinks very deeply about some of these aspects um, which might be hurting portfolios. And Rajesh, thanks for taking the time out and joining us today. At the onset, festive greetings to you and your team and family. But tell us, I mean, this festive season is turning out to be anything but festive, particularly for the broader end of the spectrum, both in results and in stock price performance. How do you view the landscape?
So Niraj, thank you for your wishes and wish you and your viewers a very happy Diwali. Uh, I think as you pointed out, the highlight of what's going on is the really poor results at the peak of the market, right? So I've never seen so much breadth of poor results as we are seeing this time. The second highlight is really the incessant selling by FIIs. I thought earlier that the FIs were selling because they wanted to move from an expensive India to a cheap China. Then we had actually thought that maybe they are concerned about the escalation in the Middle East. But really, I think that wasn't really the reason why FIs are selling as much as they are. I think the main reason why FIs are selling is because interest rates in America have gone up. There is a trade that is taking place where people believe that market participants believe that there is going to be inflation coming back. That if Trump, or even if Trump doesn't get elected, particularly if Trump gets elected, the fiscal is going to be unleashed. There's going to be large issuances of debt, and that is going to lead to long-term interest rates going up. Clearly, if interest rates go up, and God forbid, if inflation catches up, then my sense is that that is bad for equities. So that is the conviction with which why FIs have been selling clearly what is an expensive Indian market as a result of this trade taking place. You can see that trade taking place in other parts of asset markets as well. Gold is at a new high. There is good demand for crypto assets. Dollar is stronger, etc. So I think the highlights are poor results at the peak of the market and the incessant selling caused by the rising long-term yields in America.
That that that's interesting that you mentioned that, Rajesh, because one thought that with a 50 basis points cut and possibly penciling in more, that the trade was going to be that money will move from US to EMs. You are saying quite the reverse is likely to happen over the next 6 months. So if that were to be the case, how big a negative would it be for EMs like India, particularly because it was not that FIs were overweight India. While they are pulling out in October, it was not that they pumped in a lot of money before October any which ways.
Yeah, I mean, and the conviction with which they are selling, right? I mean, even
exactly.
the selling was 5,000 crores. And, that's what made us wonder, why are they selling so much with such conviction? Yes, I mean, I think the trade earlier, when the Fed did cut 50 basis points, the feeling was that it would be reflationary for assets. But if you notice, since September, whenever that 50 basis point cut took place, yields have actually been going up, and yields have gone up 50, 60 basis points on the long end in the US. And there is some conversation that maybe the Fed has cut prematurely, the economy is reasonably strong, and probably it's not accounting for the fiscal stimulus that is already in place and the inflationary policies of particularly Trump that is going to follow. So a lot of smart investors like Stanley Druckenmiller are short the US long end of the bond market. So that's quite interesting.
Wow. Okay, Rajesh, how bad can it get therefore? I'm just trying to understand the narrative for the first 8 months, or the first 9 months of the year really, was around the strength of the domestic flows, helping cushion any kind of dips and dips getting bought into. Agreed, the ferocity in October is something that we've never seen before. We can't continue seeing this, right? Or do you expect that could happen, that what we've seen in October, we could see something like that happening in November as well in terms of FI outflows?
So my sense is that what the FIs are trying to do is price for the immediate risk that is at hand. I think they will wait for the elections and subsequent policies and all of that. But India was at a new high and an expensive market. and a slowing economy. So the conviction and the margin of safety for them to sell was particularly high. So my sense is that first of all, they'll try to price in the increase in bond yields that has already taken place before they pause to see other actions. See, as far as the Indian markets are concerned, apart from the FII selling, which will stop at some point of time, if when valuations have corrected adequately to reflect the increased risk, uh, uh, my sense is that economy in India will have to repair itself. We are still in a bull market as far as the economy is concerned. I think our macro situation is still very strong. We are still in a capital expenditure led cycle, economic cycle. So my sense is the slowdown that we are witnessing today will kind of turn around. It's transient, but it'll take time, which means that my sense is that the gut feel says that the upside for the market to reach a new high will take some time. And the markets will have to digest a time-wise correction to kind of accommodate the slowdown that we have had, and therefore it will take time for it to repair and come back. So my sense is that from an Indian equity market perspective, the new highs would take some time.
Rajesh, the last time that we spoke, you mentioned that I mean, something like the real money will be made at the broader end of the spectrum, because that's where the real India story is getting built, earnings growth might happen. That is that place that is the worst hit in the last 1 month. Now, the question is, agreed, valuations were expensive and therefore the hit was obviously going to happen. Is there more pain here? What's your sense?
Right. So I do truly believe that the India story is really happening in the mid cap and small cap end of the space. The large cap earnings growth is sufficient, but I think the mid caps and small cap is really where the emerging stories are. You just interviewed one electronic manufacturing company and you see how they have done in terms of growth rates, etc. The valuations, as you point out, were very, very expensive. Even now, when I'm looking at companies, I don't think the valuations are appearing cheap, but that is the opportunity. As this market corrects and it provides more saner valuations, I am also excited that this is the time. In fact, in our morning meeting today, that's what we were discussing, that as we move forward, it will be an opportunity to buy some of these stocks which are falling, in the mid cap and small cap space as you move forward. So we are also on the lookout. But as yet, I don't think we are finding too many compelling opportunities. So we'll wait.
Sorry, Rajesh, not compelling because of the valuations or not compelling because of the earnings reportage?
Combination of both, but I would say the valuations also are not at this moment accommodative.
Okay, so we have Mr. Satyanarayan Chava with us, and Mr. Chava, I'm coming to you in a moment, but because Rajesh Bhatia, a great thinker of all things markets, including pharma, is with us, I would like to ask him one last question on this space before we start our conversation with you, Mr. Chava. And Rajesh, the question to you is this, that there is a Biosecure Act that has gotten passed. There is a cyclical turn that seems to be happening in contract research development, so CRO and CDMO. How constructive, not constructive are you on Indian pharmaceuticals? I'm leaving out hospitals, diagnostics, etc. So not the wider healthcare bucket, pure pharmaceuticals, CDMO, API, what have you.
No, the entire sector is extremely attractive. By the way, I think even today as we speak, this sector has generated probably 40–50% return in the last 1 year. So it's been a rank outperformer. Whether it is domestic pharma, whether it is, as you point out, the CDMO companies, API manufacturing, or US generics and specialty chemicals, all of these areas are doing extremely well. And my sense is that, of course, we have a lot of winners there in the domestic market, also in the global markets. So we in fact have a dedicated pharma fund, by the way, and we are quite excited over a multi-year period on the opportunity that Indian pharma offers.
Rajesh, just one last question. This Biosecure Act, so much is being spoken about. I'm going to ask Mr. Chava yet again on this. But this Biosecure Act, how big an opportunity could something like this be? Because we've heard enough of China Plus One in various sectors. Now people are talking about the Biosecure Act leading to a China Plus One and others for Indian pharma as well. How constructive or not constructive are you on this aspect? Before we wrap up, Rajesh.
No, I think it's better you ask the expert that question.
That I will. That I most certainly will.
Let him kind of articulate that
Okay,
opportunity.
Rajesh, hang on. Let's hear it from Mr. Chava before we start the Laurus Labs interview with him. But Mr. Chava, just not for Laurus, but for the space at large, how crucial is this Biosecure Act, and when do the benefits start trickling in, sir?
I think the Biosecure Act will certainly benefit Indian manufacturing-focused pharma companies. There are some companies which are marketing-focused. Some companies focused on the manufacturing. The companies with large manufacturing and expertise in complex chemistries, they are going to get benefit. Whether this act becomes a reality or not, but people are started looking at alternatives for their late stage, large volume clinical programs. If somebody needs 100 kg, he will probably prefer to take it to Europe or US. If it is, they need 100 tons, for example. For them, look at Asia, especially India, is a better opportunity for them to put a large volume late stage projects. I think that's very positive for Indian pharmaceutical companies.
Okay, Rajesh, before we let you go, therefore, Nifty Pharma has delivered healthy returns. I heard you say you expect the same can continue, or is it difficult to pencil in at a point of time when the incessant selling from FIIs continues?
Well, not at the same pace as the last 1 year, but I think over a multi-year period, I think given the valuations have already kind of extended themselves on the pharma side. But my sense is that the earnings growth will kind of be multi-year. So in that sense, I think, you need to be constructive on the pharma sector over a period of time. Also, it's a fantastic defensive to own in troubled times, especially if things really go awry on the global macro front.
That's certainly true. Okay, Rajesh, great having you. Thank you so much to you and yours. A happy festive season, and thanks for being with us today.
Thank you.
All right, that's the view from Rajesh Bhatia, CIO of ITI Asset Management.